So we're delighted to welcome Dave Mabe, who is CTO of Trade Ideas, which is a popular day trading platform. Some of you probably heard of it. But Dave lives here in the Triangle area. He's a graduate of UNC Chapel Hill, and he originally started his own online trading journal, Stock Ticker, which he sold to Trade Ideas in 2011, and he became an officer of Trade Ideas, chief technical officer. But now he's not talking here today in his capacity of officer of Trade Ideas. He's talking as an individual trader because he trades, I believe, 15-day trading strategies or more. He can tell us if that's true or not. And he's teaches certainly a little bit at Trade Ideas, explaining many of those same strategies. He also offers coaching on his own at davemabe.com/call. And I'd like, I think we could have a very interactive session today. Dave is going to explain a lot of ideas connected with day trading, 7 tips for do-it-yourself day traders, the mindset of the maverick. And with that, I'll hand it over to Dave.
Thank you, Don. I appreciate the intro there. This is the first time I've given this presentation, so it may be a little rough around the edges, but feel free to ask questions anytime. And Don, maybe you can keep track of questions and maybe interrupt if you see one that's worth answering, and as I keep going here. So yeah, the mindset of the maverick trader, 7 common traits of successful traders. Let's see, can I advance this? There we go. Like Don said, my name's Dave Mabe. My website is davemabe.com. I'm the CTO of Trade Ideas. Trade Ideas is a real-time alerting platform. It's, I don't like to brag, but it is well known as sort of the best in the business among traders that use it. I did start a online trading journal. I believe it was the first online trading journal back in 2005. As Don said, it was called Stock Ticker. I created that because I knew it was what I needed to trade well. And I'll mention that in one of the points here about keeping a journal and how important that is. I trade 15+ trading strategies. Many of those are automated strategies. Some of them are almost automated strategies, a little bit of discretion in there, and a manual strategy or two. I coach traders on the side. So the thing I'm really good at is helping traders create their own strategies and have a process for creating their own strategies and improving them. I'm a North Carolina native. I've been here my whole life. I grew up in Pofftown, right outside of Winston-Salem. As Don said, I went to UNC and just never left the Chapel Hill, Carrboro area, and have been here ever since then. So I don't think I'll ever leave North Carolina. I'm glad that there's this group here that for traders, and Don, you've done a great job over the years keeping this going through COVID, and I'm really honored that you are having me here to speak. I appreciate it. So 7 common traits of successful traders. So in my experience with the trading journal that I started and sold to Trade Ideas, and my work as the CTO of Trade Ideas, and through my newsletter, my free newsletter that I write, I get to interact with a lot of traders. I think probably hundreds of successful traders I interact with. I work with traders of all levels, new traders, all the way up to 7-figure traders. And so I feel like over my career, I have a really unique perspective on what they do differently than other traders and why they're successful. there's no real secrets, but they do have traits in common that that I'm going to go over here. Number one, they keep score. And I don't mean that they compare themselves to other traders necessarily, although some of them do. But almost every one of them keeps a journal and keeps track of what they're doing in a trade journal. So they can go back and compare, look at the results, see where they do well, see where they don't do well. And I can tell, you can tell somebody who is not successful because they don't keep a trading journal. This is probably the most important thing and the most common thing that all successful traders do. They're honest with themselves about the performance, and they keep track of it meticulously. And it's important when you keep track of your trades, it's important to keep track of them by strategy. So why did you take the trade? What was the reason you had? What was the impetus for getting in the trade? You should know that before you get in the trade. You should have a plan for everything, for any eventual outcome that trade will take prior to getting in the trade. Keeping a journal will, it encourages you to do that. It's going to be, keeping that habit allows you to have a plan ahead of time, and you end up not trading emotionally, because what you end up doing is all of the research, all of the reasoning for taking trades is done after hours. By the time you start trading, you have all the reasons that you might have for taking a trade, and at that point, you are just executing a strategy. So let's go to number 2. Successful traders have a process to test their ideas. So I used to think that traders just some traders had an innate ability to come up with profitable trading strategies. Like they were just born that way. But what I realized after working with lots of traders is that's not true. They have a process to test their ideas. And this is really where most work for successful traders lies, is this process for testing their ideas. Backtest, when you come up with theories, you need to have a process for testing them and verifying them. You can't just go on hunches or what somebody tells you in a chat room. You have to be able to, I call it a BS detector. My process for backtesting is something that I know that I have built myself, and I know I can test an idea and determine its validity before taking the trade. So by the time I take trades, I know they have edge because I have a system and a process to determine if they do. And that's all not by what somebody else says. That comes from the process that I have to verify that it does have edge. So my whole goal here is to reduce, I put a lot of time into this process, and my goal here is to reduce the time between when I have an idea that I think might have some edge and to turn that into an actual trading strategy where I can put money at work. And this is true across all successful traders. All right, let's go to number 3. So another kind of interesting thing about successful traders, they're not primarily motivated by money. And notice I have an important word there, primarily. Of course, I'm not going to lie and say they're not motivated by money, but it's not primarily their main motivation. They're doing this because they love it. They like the process. They like being successful at something. It's a performance activity, and they're trying to be the best they can at it. So I just sent, actually today, I just sent a message to my newsletter that has a lot of successful traders on there. And I asked just a simple question: why do you trade? And there was a caveat in there. They couldn't, I said, part of the rules of this in your response, do not use the word money, cash, profit, anything related to money. And I'm just getting some of these responses now just before this, so I thought I'd read some. They're pretty interesting. First one, to do something I love and spend more time with my family. The second one, curiosity. Another one, I really enjoy having a winning strategy and using it. Another one, to learn and research your trade and be rewarding. There's nothing better. So notice that maybe, a lot of traders may not be able to articulate it exactly this way, but they're not really motivated by money directly. It's sort of it's almost like if you're focusing on the money, you're not going to make as much. But if you're not focused on the money and you're focused more about the process, you will make more money. That's kind of the way I think about it. Let's go to number 4. They're driven to constantly improve. So a good example here, when successful traders have a good trade, there's not much patting on your back. There's not much celebrating. Maybe they acknowledge that, hey, this is the good trade, but immediately the first thing we do is figure out, okay, could I have made more with this trade? How could I have made this trade with bigger size so I could make more? Are there other, because I've had this successful trade, perhaps there's more trades like this that I can include in my system. And it would generate some ideas that I could use in my process and figure out, okay, I see that this trade happened, it was successful. How can I find more like this and generate more profit from them? So it's easy to be motivated by losing trades, or it should be. But successful traders are really also even motivated by the good trades they have. They don't rest on their laurels. Go to number 5. They systematize. And what do I mean by that? Does this mean they trade fully automatic? A computer's making trades for them? Sometimes. A lot of times. But there's a whole range of things you could do to systematize your trading, well short of full automation. So you can enter your exit orders right after you enter your trade, which you should be doing. You should have a plan for it. Like I mentioned before, you should have a plan for exiting your trades. You can enter your exit orders and have them working as soon as you enter the trade. That removes the temptation for you to override your system or, have your emotions get the best of you and do the wrong thing. One example here of what I did many years ago, I was trading a manual system at the time, and at the end of the day, I would review the trades I took and compare that to the back test and see, okay, which ones should I have been able to take? And sometimes I would miss some trades. So I really wanted to figure out, okay, why am I missing some of these trades? I have my alert window set up here. I'm getting the alerts. But still, sometimes I'm missing some profitable trades. So this was long before we had such powerful computers, and you couldn't record video of your screen at the time. But I did have a tool that I would use to take screenshots like every 5 seconds of my screen throughout the trading day. So after the fact, I could go back and see, okay, why did I miss this profitable trade? What was on my screen exactly at the time? How can I adjust my windows so that I would see that at the exact moment where I needed to be able to see it to make that trade? That's the kind of systematizing that traders do to be profitable and to be successful. Number 6. This is an important one. Share ideas with other trusted traders. I mean, that's why you're here. There's you have this great trading group that Don has shepherded all these years, and so you've made the right step to share your ideas. One of my friends, Mike Bellafiore, who is the founder of S&B Capital in New York, he says networking is a trading skill, and that's super important to find other traders, interact with other traders, share ideas with other traders. You know, a lot of traders I come across are obviously protective of their trading edge, but they are on the lookout and cultivating a trusted group of traders that they can interact with. And they're always looking for that and sharing ideas. I mean, some of the best breakthroughs I've made in my trading career were the result of collaborations with other trusted traders, ideas that we threw back and forth. It's such an important part of trading well. The other thing I'll say is, whenever you're in a group, this group, any group you're in any capacity, you know, trading or otherwise, you should strive to be a giver and not a taker. Most people, or a lot of people I see, when they join a group, they're trying to figure out, okay, what can this group give me? What can I get out of this group? But really, the mindset should be, what are my unique abilities that I can give to this group to make the whole group better? And it's that kind of attitude that will make the entire group better, and you will get more out of the group and other trusted traders when you do take that type of attitude. Be a giver, not a taker. One of the best strategies I've traded came from a collaboration I had with another trader. And I'll just describe a little bit about that. He had this trading idea, and I had the ability to backtest the idea, and I had the ability to create software to enter trades for this idea. So we both brought something to the table. That strategy worked pretty well for a couple of years. We were actively trading it each day, each independently. And since then, he has, you know, his life circumstances changed. He's moved on and no longer trading. But I kept trading the strategy, kept looking at it, kept thinking about it, traded some other strategies that which I learned from, and then so eventually I was able to take this strategy and sort of had some realizations about it from things I learned, and turn that into probably my best performing strategy. And that, I don't believe that would have come about without this collaboration with this trader. So you know, that strategy and that collaboration was years, the initial idea was years before that strategy actually really started performing well. So these interactions with other trusted traders are super important and super valuable. All right, the last one, and this is a biggie: ability to adapt over time. So let me give you a little story here. There was one point, the closest I ever came to quitting trading, and I was pretty close at this one point. So when I first started trading, it was probably 2005. I was looking at at trading blogs at the time, and I think, man, this is something I think I could get into. And I was following a site, Trader Mike. I don't know if anybody's old enough to remember that site. I'm still friendly with Mike. He lives in Atlanta. But I followed a strategy that he was blogging about. So this is the first day trading strategy that I traded. So luckily, it was a pretty good strategy. Like, it worked right away. Not super great, but it was enough to keep my attention, and I knew that there was something I can do to improve the strategy. So, and that's what I did. So I traded this strategy, kept improving it, kept trading it bigger and bigger, and then it worked well. And then at the end of the 1 year, I thought, okay, for this plan for this next year, I'm going to trade this bigger. Like, I want to take it to the next level, trade it with bigger size. And it stopped working. Like, it sort of flatlined and even lost money that year. So, I was like, okay, well, this is probably normal. Let's keep going. So I would, reduce size, which you're supposed to do in a drawdown. And still, it was still flatlining. I did not get out of that drawdown. So I finally was like, well, okay, maybe the strategy just has stopped working. And that's a really hard thing to have to grapple with. I mean, this was a strategy that I felt like I'd kind of sort of grown up with in my trading career. I'd made a lot of money from it. It allowed me to do certain things in my life with the money. And here it was, all of a sudden stopped working. Like, that was a really difficult thing to have to deal with. And I mean, like, I felt like this strategy was part of me. And so I realized at that moment that like I said, I did think about quitting. But what I ended up doing, so I'm not going to quit, but I do not ever want to be in this situation again where I have just a single strategy that stops working. So I knew at that point that I had to pour a lot of energy into creating a process for myself that allowed me to create multiple strategies so that I would never be dependent on a single one, and also have a roadmap, what I call a roadmap for each strategy. So like a plan for what happens or what I'm going to do when a strategy goes into drawdown and I need to make an adjustment. So this was a big step for me in being more adaptable. Like, strategies come and go, and you always have to be tinkering, learning about the market, watching the market, having a list of ideas that you're going to test to hopefully turn into a trading strategy. So this ability to basically reinvent yourself every so often is a very difficult but a critical part of being having long-term success. So that is a very critical part of trading well. And that is the conclusion of my talk. If you want to interact with me more, here's my website, davemabe.com. There's a free email newsletter that I write weekly on improving your trading. You can sign up to that for free. Here's a link for trade ideas if you're interested. And there's my email, davemabe@gmail.com. And I'm happy to take any questions you might have.
Dave, very good ideas. James D asked earlier, and I think we could raise the question. Statistically, he says, 90% of day traders blow up their accounts. What are they doing wrong?
Well, I would say that's probably an accurate number, I guess. Well, my guess is that number takes into account like people just quitting. So maybe you call that a blow up or not, but I think the biggest thing you can do is that first one, keep a journal. Be honest with yourself about your performance. Have a process, like have a plan for what you're going to do before you enter the trade. A lot of people I see don't have that. They don't really have a process for having conviction in a trading strategy. And that's really the problem is if you don't believe in the strategy, so let's say you're trading somebody else's picks, or you're trading some stuff that somebody's calling out in a trading room. If that strategy goes into a drawdown, you're really like, you don't have the belief and the conviction that it works like you would if you're backtesting a strategy. You can verify, how often this strategy goes into drawdown, if the current performance is unusual or not. That is the key for long-term success, is having that process, having keeping a journal, analyzing your performance closely, and being honest with yourself about your edge and what you do well and what you don't do well. That's a good question.
Yeah. I guess Rob Esposito said trading without edge is the problem for many people.
Yeah, it's essentially the same thing I said. Yeah,
Sure.
that's exactly right. I mean, you have to trade with an edge. You're not gambling. Like, this is not gambling. If you don't have a plan, if you don't have conviction in your trading strategy, then yeah, you are gambling. But that's not what you want to do. You want to trade with an edge.
Are there real edges out there, and how does one go about finding them?
There's plenty of edges in all instruments. And I see, I work with traders every day that have an edge and cultivate their own edge. Like I said, you have to have a process for coming up with your own edge. Like, nobody's gonna spoon feed it to you. So it's important that you do your own research. Everybody has different risk tolerances and abilities to trade the market, free time for trading the market. So, you have to figure out what works for you.
And would you adopt somebody else's edge? Would you look through, let's say, systems that you have proposed or somebody else has proposed, and attempt to validate that those have edges? And can you do validation without actually trading, or or back testing?
So yeah, there's a couple questions there. You can, I feel like you can start from a strategy that somebody else is trading and that somebody's, made available in a book or a forum somewhere. But and that can work. Where you really will have success is where you make that your own. You're going to have to figure out how you adapt that, and uh, really truly make it your own to do well at it.
Yeah.
And your last question was about, like, is there a way to come up with an edge besides trading or backtesting?
I'm saying, are both of those essential, or is either of them optional, or do you have to, or is neither of them
Yeah,
essential?
it's good. It's a good question. I think one or the other is essential. Like, think about where you're like, I go back to the example of what are you going to do when your strategy goes into a drawdown? And all strategies are going to have drawdowns. At that point, you're going to have some conviction or some reason to believe that you should stick with that strategy and that this is normal. And the only way you can get to that point is either through experience, because you've traded it long enough that you know it well enough that and you have enough history with it that you're confident in it, or backtesting it, so you have a long history of theoretical backtesting, so you know what's normal for the strategy. Otherwise, when that goes into drawdown, you're gonna look for something else, or you're gonna stop trading it, or you need to have that conviction to be able to trade it well. And the only
Great.
ways I can think to do it is trade, actually trading it, actual real world experience, or back testing.
Do you advocate trading really small, and for how long?
Oh, absolutely. Like, that is probably one of the most common mistakes I see traders make. And I've made the mistake. Like, you've back tested a strategy and it looks great. And you're like, wow, okay, I'm ready to put this, I'm ready to put some money behind this. And you trade it too big, and then there's some factor that you didn't consider when you actually start trading it that causes you to lose money. So I say do some paper trading first, and a lot of platforms will have a paper trading account. IB has a paper trading account. Trade Ideas, we have a paper trading platform. At least paper trade it first, and then if you're going to make it, the first step you should do is trade it with very, very small amounts of money. The point is not to make money when you're transitioning from backtesting to trading. The point is to, I call it, you're getting feedback from the best traders in the world, right? You're actually making trades in the market, and they're giving you feedback. It's like free feedback. So make those trades tiny, and I guarantee that is the part where you will learn a lot about trading. That first step of making those small trades. So trade very small, increase slowly over time as you get confident.
How long do you think an edge is likely to last?
That's a good question. I think edges are different. So there's not a single answer that encompasses every edge there. Some will last a small amount of time, some will last a large amount of time. I always look for, and I have my whole process designed around strategies that I think will have a strong edge for a long time. And How do I do that? Well, I look for, I have a lot of trades in my back test. I back test for a long period of time. And um, specifically sort of from the ground up, when I'm thinking about an idea, I want it to have some staying power because I don't want to be adjusting it all the time. I don't want it to sort of have a short lifetime. I want it to have as long as possible. And that's not always easy, but I felt like I feel like there's a way that you can do that with your process to look for strategies that have more staying power.
Would that involve back testing?
Yeah, absolutely. Yeah, back testing a larger data set, go back further in time, looking for a pattern that occurs frequently and trading that. You can imagine, if you have a trading strategy that trades, once a year, once a quarter, once a week, you're going to end up with a very different set of data to be able to look at. And I think in general, the smaller the data set, the less reliable it is, the less staying power it has as a general rule.
Very good. We have a bunch of questions, and I'm just going to go through them
Sure.
gradually, but we'll get to all of them. So people, don't worry. We're not skipping over any questions, except to keep them in a reasonable order in terms of reasonable flow. So we're not, if we skip over your question, don't worry, we'll come back to it. There's a bunch here that I want to ask. Okay, so we've got a couple, let's see. Well, here's one from Tracy. How do you deal with stress when things do not work out?
Yeah, that's a great question. The way I deal with it, I think, is if you're keeping a journal and you're keeping track of every trade you make and you're going back and reviewing that over time, just the fact that you're reviewing it and have that history is going to give you confidence. And part of that confidence is it reduces the importance of any single trade. So when a trade doesn't work out, that's okay. I mean, you're not every trade is going to work out. You're like that's kind of the whole point of trading, is that you're going to have losers. Like anybody that says they don't make losing trades is not telling you the truth. So it's all about coming up with a good strategy, understanding the backtest, understanding the history of the strategy. And that has always given me confidence to know and to understand what can happen. What are the range of things that can happen with this strategy, and to just understand that losing trades are part of the game, and you have to tolerate those to get to the winning trades.
That's very good. Yeah. Michael said, can you show an example of a trading journal, text or spreadsheet?
I don't have one right at my fingertips, but there's several different online journals you can use now. TraderView. If you're just getting started out, there is nothing wrong with using Excel. In fact, I encourage people to start using Excel for a journal. But yeah, there's plenty to choose from. I have a good article on what you should be putting in your journal. When sometimes people assume you mean like you're writing in a diary, like, hey, this is what I had to eat today. This is how I was feeling when I took this trade. Like a lot of that stuff is kind of bunk. You really want to get the actual data points that that took place for that trade, because what you're really wanting to do is you want to be able to go back in time and see exactly what the circumstances were before you took that trade, and go back and use that data set that you're putting in your journal and detect trends. You might find that, when you trade over big with a large size, that those trades don't work out, or when you trade a certain time of day, those trades perform poorly compared to another time of day. So you want to record the things that you are going to want to keep track of, and go back and look and see what works across a large number of your trades. And when you're able to do that, it sort of reduces the importance of any one losing trade that you might have going forward, because you're doing the right thing when you look at a large number in aggregate. That's a good question. Anything
Sure.
else?
Jeff H. Asked a similar follow-up question, perhaps, or the same question, perhaps. What are your thoughts about using an online journal? Are there any that you would recommend? And you mentioned TraderView. Is that one?
Yep, TraderView. I would certainly recommend using an online trading journal. But like I said, Excel is perfectly good to start with. And but the point is, keep a journal for sure.
Very good. James D. asked, can you go over some strategies that have been working?
I'll go over some in my newsletter. I have a gap trading strategy that I've traded for a long time, so it looks for gaps for stocks that are gapping up or gapping down today. So and I'll go over some examples there. So
so they can find that gap strategy described online in your blog?
it's on my website, davemabe.com.
Has it varied in performance over time, or is it pretty solid over time?
Yeah, so I have adapted it over time. So every strategy I trade, like I said, I have a roadmap for it. So I know that, okay, if it deteriorates enough, I know what adjustment I'm going to make to improve it and keep it going longer. So yeah, but like I said, every strategy I trade, I'm constantly making adjustments to. And I would encourage you to the real turning point I made in my trading career was not blindly following somebody else's strategy, but looking at that strategy and figuring out, okay, how can I trade this my way? How can I make this fit into my routine? And really then is when you'll make a that's when you'll have real success.
Yeah. James D. says large firms employ armies of math wizards, statisticians, PhDs, who perform model training, strategy backtesting. How can the retail trader even compete with comparably negligible resources? And John S. replies, retail traders can participate by bringing in funds to create a tax-deductible loss.
Yeah, that's a fair question. I mean, it's actually a really good question. And I think that you need to figure out where you have an edge. Now, where do you have an edge over a big institution? Well, the big institutions actually are at a disadvantage in a lot of ways. A small trader with a small account, relatively small account, actually has an advantage over large institutions because there's a whole swath of trading strategies that you can trade with that small account that a big institution couldn't even dream of trading. I mean, when a big institution has to put money at work, think about a big mutual fund. They have a lot of money that they have to put to work. It doesn't even make sense for them to take trades in stocks with low volume. You as a small trader with a small account have a huge advantage over the big guys. Yeah, they have tools and some models that are more sophisticated. There's no question about it. But there's a lot of edge out there for a small trader to take advantage of. No question.
And do you believe it's true that you have to blow up your account at least once in your career in order to understand risk?
I wouldn't say blow up, but I think you certainly have to go through a significant drawdown. And you will. Like, you will go, like, trading is not easy. And the points where you have setbacks, you have drawdowns, and how you respond to those, that is where you learn a lot about yourself, learn a lot about the markets, and that's where you're going to make your big breakthroughs. Is when, as I was saying before, where that strategy I had that I started trading years ago went into a drawdown, I was pissed. I mean, I was, I cried in my beer for a little bit, but I got back out there and said, no, I'm not. I was super motivated to never let that happen again. So I guess in that sense, yeah, you're gonna run into some adversity, and it's how you respond to that that is gonna make you a better trader.
What are, I mean, I guess we have your company's product, Trade Ideas, is one product that can use. Are there any other platforms that you'd recommend?
I use Trade Ideas. I also use a platform, Broker.
Yeah.
That's a really good tool for back testing and charting. I work with traders that use Python. So I'm working with a guy to set up a process for back testing, and he's doing it all in Python. So, I realize that's not for everybody, but this guy is a really technical guy and had a lot of Python skills. So that's what we chose for him, and that's working out well. So there's lots of tools out there.
Yeah, I think Broker is one of the best tools for backtesting platforms, and you can write strategies. I think it has, I've been gathering recently, it has some unique strengths. Is that right?
It does. I've used it for a long time. I would say the language that you use to create the strategies is pretty powerful. It is a pretty quick back tester as far as the ones where you have to download the data, which Broker is one. So you download all the stock data and all the processing is done locally. That takes some time, but as far as those types of software go, that's a fast one.
Yeah, I think I remember now. I heard that you can write native C# code or in Broker. It doesn't have to be, and you can include your own DLLs.
I think that's true. I think yes, you can do C sharp. I think you can do C++ in there.
Mhm,
That's, in addition to the main one, which most people use, which is I think their AFL
mhm,
language.
mhm,
Um, Ninja Trader is another
mhm.
software that you can use C sharp to code in.
How about all these platforms where, I forget what they're called now, but where you're operating in their online backtesting environment, and I gather they sort of capture your code. You can't really port it out readily, or is that true?
Do you know which
Well, I
platform
can't
might you?
remember. There's one that a lot of people are using. Can't think what it is. Uh, James D says, thoughts on algo trading. Can learning Python help? Is it a good idea? Do we all need to learn Python? I know you mentioned
Uh,
it already.
yeah, I'm a programmer, and I got into programming because it was helping me in my job, and I knew it's what I could just be a lot more efficient. It certainly helps being able to have those skills for sure. Um, is it a requirement to be able to trade? No. Like I work with traders every day and some of the best traders I know that can't code, one line. So it's possible to do it either way. Um, Coding certainly helps without a doubt. Good
Yeah, I mean,
question.
yeah, I was thinking of Quant Connect, I think, earlier as one.
Yeah, I'm not super familiar with Quant Connect.
Sure. Um, who else here is a day trader, and what are some of your experiences or your that you can share and compare with Dave's? Or is everybody option trader? You think that
Right.
I know, Dave, you said that to
Uh,
me, go ahead.
Don, I think, does Dan have a question?
Yeah, I was didn't want to interrupt there, but I had a comment or two there. I take it you're basically long only in your day trading, or do you switch from the long side to the short side?
I trade both ways. Most of my money comes from the short side, actually. Um, but I have strategies that trade both directions.
Uh-huh. And are you do you trade multiple underlyings, or you stay with ETFs, ETNs, or
I'll trade any U.S. equity. So that includes ETFs, CTNs. Typically, it's non ETFs, but yeah, I don't discriminate. I'll trade anything that's moving that matches one of the strategies I have. So, I end up trading lots of different symbols throughout the month.
Mhm. So, and most of your opportunities are picked by watching price or volume or technical uh, patterns, or what triggers your I'll trade this.
Right. Um, Technical patterns. So I will be looking for a particular pattern. So my basic workflow is I'll see some, I'm watching the market. I'm seeing what some trades are doing in a strategy that I have, and then I'll see something that maybe is adjacent to that strategy or that my strategy may have just missed or didn't quite meet the criteria, and or maybe go the other direction. So I'll look and like I'll find some idea that I think, okay, maybe there's some edge here, um, and then I sort of quantify the pattern and go back and back test that pattern to see if my theory, has legs. And then at that point, I'll trade. I'll back test and figure out, okay, how many trades are coming in for this pattern? Like how often does this pattern occur? And is there enough, does this happen enough where I could create a strategy out of it? So then what I end up doing is, if I determine that it has enough edge that, and it happens frequently enough, then I will use my process to figure out, okay, which subset of the trades that are coming through for this pattern do I actually want to take? So what I'll end up with is several rules around the strategy that, based on technicals, based on volume, based on price, all the above, that I can determine, okay, this is like the most profitable subset of the trades where that pattern occurs. And that's when I'll take the most profitable ones, or the ones that I think, okay, anything above this level I feel like is going to be profitable, and I'll go forward with that. I'll trade a small, like we were saying earlier, a paper trade first. I take trades that are really small at first, and continue to, tweak and make adjustments, and continue increasing size over time.
Okay. Well, then how far back are you looking for to capture the pattern? A
That's a good
week, a
question.
day, or a year, or what's your look back time for to get your projections of future price movement?
That's a great question. It depends on the strategy. If you've got a lot of occurrences, if this pattern occurs a whole bunch, you don't really need a ton of data. But for some that don't occur that frequently, you need a lot. So I have the ability to go back like 10 years if I need to, for some strategies. But I would say most, I'm comfortable going back 4 or 5 years. So, but like I said, it depends. It depends on how often it occurs.
Okay. Well, I must admit I'm not into the technical trading side as much. I'm more of an options trader, looking at those particular characteristics and doing the option side, and only occasionally be trading the underlying itself, and then end up selling calls against it, or puts, whatever the case, whether long or short. Thanks for the expanding your methodology.
Sure. So Dan, do you do any sort of back testing at all, or you like how do you think about your edge?
Well, I like all options traders, I sell. Well, not all, but at least in my case, I sell. Uh, uh, the opportunity is when we get high implied volatility, of which we've been lacking recently, and until just recently, we've had some of it turn around. But that's basically what I do. I usually, in the group here, I'm a bit of a lone wolf. I sell earnings trades mostly. That's the game I play.
So when earnings season isn't in, which it's not right now, you don't have much to trade, or you have other strategies you trade during when it's not option season?
I usually a lot longer time frame, depending on how much time I have. Usually, the earnings trades are quick and easy, short term, and you're in and out and that sort of thing. And earnings, we've got a few left here. Nike's yet to come up.
Yeah.
And those sort of things. But it's generally the season is done for
Yeah.
3 months. But
Yep.
it's usually a 45-day trade, and then take profit or adjust at 21 days. If you're familiar with Tasty Live, Tasty Trade mantra, that's the scheme that I usually use. Not totally, but a lot of the trades.
Yeah, I know those guys, and at Tasty Trade. Yeah, it's a good firm.
Yeah, I've been using them for, I don't know, 12 years at least.
Mhm. Great.
Thank you again.
Sure. Yeah. Yeah. Good questions. Any other
And
questions?
yeah, well, Alice, well, first of all, while we're on options, Allison Armstrong asked, did you trade MU options today? Earnings were today, the tasty trade. Or I guess we could ask Dave, do you trade earnings also in a different way?
I have a few strategies that trade on the earnings days. MU did not come up for me today in any of those strategies, but yeah, it certainly could have. Did anybody else trade it today?
Michael, did you? Dan, did you?
I tried. I put an offer in, it just didn't pop. I instead of the position, I kept the penny, and I was trading and trying to get on. Now in the ranking that I do, which is implied volatility, it didn't rank as high as Nike, which is coming up tomorrow. And so instead, I mistakenly I have a position on in Nike exactly a day early. I would have rather have waited till tomorrow afternoon to put it on. But we'll see.
John S. says CCL high IV tomorrow. Is anyone looking at, Dave, are you looking at that, or Dan, are you looking at it?
CCL.
That's what he says.
Okay. No, that one didn't pop up on my list. That's Carnival Cruise Lines, if I remember.
Oh, that's a frequent one, isn't it? It's a popular one to trade.
Yeah, I think that might be it's coming up, but I haven't put a position on it.
Yeah.
I will look at it. I see it some down the list later in time.
Well, thanks, Dan, for those questions. It's great to get some participation. Mike again asks, Dave, could you name just the names perhaps, or the general idea of some of 2 or 3 of your strategies, so he can get a feel for what kind of strategy they might be?
Sure. So I trade some gappers after earnings. So gappers particularly that have earnings either last night or yesterday or this morning. Look for do something with some trading halts. So look for some halts that happen during the day, the volatility halts. I look for some early morning news items that come out for trades that are moving in the pre-market. I'll look at some of those pre-market trades. So those are some examples of what I do.
Dave,
What would a
when
volatility
you,
halt be? You mean
Well,
is it the stock is trading is suspended,
yeah,
and then
yeah.
what do you do?
There's some action around that. So, if you can look at the volatility halt, and there's specific rules for when those occur, and you can look at there's a lot of action around those, and if you look at the action coming out of the halt, you can look at the action going into the halt. So there's some interesting things there to look at.
I think I've heard that from other people. They say that when you have some anomaly like that in the market action, it takes it out of its efficient behavior, and it goes back to the old type of inefficient behavior where the patterns work again. All the old patterns that don't work so well, according to some, work again. I don't know if that's true or not.
Possible.
Dave,
It's possible.
Dave, when
Yes.
you trade a gap, are you looking for the principle of gaps will fill or some other
there's some, yeah, so there's some, I'm looking for sort of gaps kind of as a proxy for volatility. So what's moving today, let's filter on the gap. So and I'll look for a specific pattern after the open. So okay, here the stock opens, it's a gap up, let's say. Depending on the behavior in those first few minutes, I might trade that long, so with the gap, or I might trade it short. I may fade the gap. So depending on that first, the first few minutes of the market, I may, one of my strategies will trade it long, or another one might trade it short. So it depends.
Thank you.
Sure. Good question.
Dave, do you do any long-term trading at all?
I have a long-term account that I have, basically buy and hold, S&P ETF, hold forever.
Do you hedge those at all?
I don't hedge. I don't really believe in hedging. Like, I felt like the better hedge for me is just to have more profitable strategies that hopefully are uncorrelated, or as little correlation as possible between them. I always felt like that was a better hedge for me rather than like directly hedging some trade or strategy I'm making.
Sure. So since you have permanent long exposure, your long delta constantly in your investment portfolio, is that one of the reasons you favor short trades, because of the diversification part?
No, I'm looking for strategies that make money. So I don't discriminate on the symbol or the company or the direction or the pretty much anything. So I'm looking to make money with strategies, and if it's long, if it's short, that doesn't matter to me.
Have the markets changed fundamentally over the years? Has your basic approach to trading changed fundamentally over the time?
That's a really good question. I feel like that the arc of trading over time, like if you think about it, computers are getting more powerful over time. More and more people are getting smarter over time. More and more people are recognizing edges over time. So I feel like in general, the arc is, if you think about a trading strategy, it's gonna be deteriorating over time slowly. So that's kind of a scary thought, but also it's kind of motivating. Like you have to have a plan to continuously improve and kind of keep ahead of that curve. So I feel like there's that consistent arc of slow deterioration that basically keeps you on your toes.
Great. Now, you have had the luxury or the ability or otherwise of automating a lot of your trades. I think inside Trade Ideas, or perhaps coming up with other trades. Has that experience, do you think, fundamentally changed the way you do your personal trading, or has it given you a different understanding? Has it changed your mind about whether certain trading styles are good or not? Or would you be in about the same place mentally in terms of your trading, with or without all the automation that has been done inside Trade Ideas?
I think automation for me is like a really good reference point and a way to execute my trades consistently. So what I found when I first started trading, the strategy I was talking about earlier, and I was trading it manually. Now, I had a system, very clearly defined rules. I was trading it every day. I felt like I was consistent throughout the, months and months and months of trading that strategy. And as I look back at my journal, I realized that I look back maybe 6 months previous, and I had realized that, wow, I was trading a little bit differently. I could tell that I called it drift. Like, I thought I was being consistent, but there was some small changes that had somehow crept into my workflow or my routine. And that was kind of a wake up call for me. I thought, okay, that concerned me a bit. So I realized that, all right, I need to be automating this as much as I can. I need to be back testing this as much as I can, mainly so I can have a reference point to compare to. And so I put that in place, and then every day after I take trades, I'll run the back test and see what the back test would have taken, compare that to what I actually took, and if there's a difference there, I need to be able to explain that, and I need to figure out why that difference exists and figure out what to do, if anything, to um, match those up. So it really became the automation became just a way to be. At first, it was a way to be consistent that I could be comfortable with, and there's many benefits to automation, but that was the main one initially. But what it turned into is really I have more capacity to trade more strategies. So, I can't trade 15 strategies manually during the day, but a computer can, and I can tell a computer how to do it. So it became, it started out as mainly a reference point, but it turned into like creating more capacity for myself.
If God forbid you left Trade Ideas one day, would you attempt to recreate? I suppose you would just use Trade Ideas, but if even if you weren't an employee, but are you thoroughly sold on the benefits of including that in your own trading, that degree of automation?
Oh yeah, 100%. And the way I got started working with Trade Ideas is I was a user. Like, I used Trade Ideas, and I was like, man, this is really great. So I reached out and said, hey guys, I love this product, and it'd be really a dream to be able to work on it. I had a whole bunch of ideas from my online trading journal service that I had. So I had tons of ways that I wanted to improve it. So, once they hired me and I got to be able to work on it, man, that was just awesome to be able to. I felt like a kid in a candy store, like making all these improvements that I knew I wanted to make that would make me better. So that was super fun.
You're very much at home there.
Yeah.
Have you looked at, a lot of people when they hear day trading, they think of Forex, I think. Have you looked at that side?
I have looked at Forex. I have a guy that I'm coaching now that he's trading Forex. Yeah, I think there's edge there. I think there's anywhere you have human participants, which is every market and every, if there's enough liquidity and there's enough emotional humans participating, you're going to be able to find some edge.
Allison Armstrong asks how many users, and I realize I don't know whether you want to answer this or not, but how many users does Trade Ideas have these days?
Yeah, our marketing department won't let me answer that question, but it's many thousands, many thousands.
Oh, that's good to hear. Let's see. What other forms Well, I think, does anyone else have any other further questions? Or did you want to, we're pretty well, we filled up, we had a great series of questions and answers. And I think I learned a lot about day trading. What else do people need to know about day trading before they start?
Yeah, it's a good question. The reason here's how I got into it, and my thought process for doing it. And if you know, I remember my dad at the time and telling him, "Hey, Dad, you know, I'm thinking about doing some day trading." Well, he was like, "What in the world are you talking about?" But what convinced me to do it was I remember having, I think I was doing some swing trading, some longer term swing trading at the time. You know, I would hold maybe a month or 2 months, and I remember one particular trade. I don't remember the symbol, but I remember this trade vividly. I held this trade. I held it into earnings. They beat earnings. I was like, hey, this is great. They came in ahead of expectations, and the stock tanked. And I thought, okay, this is crazy. Like, how would I ever be able to predict that the market would react that way? That just doesn't make any sense to me. So what I realized in that moment was, like, all the big gaps happen after hours. Like, that's where all the risk is, in those overnight gaps. Of course, there's a lot of money in there in those gaps, but to me, at least at that time, to me, it felt less risky to day trade than to hold overnight. So that's how
Dave,
I got into it, and it it also, you know, I'm a data guy, so the more data, the better. And there's more, there's just, you look at the math of it, there's more patterns that occur when you look at a smaller time frame. So it was a very natural progression for me.
Dave, can we go back to the definition of day trading? Does it include the idea that every night you are flat?
That is what I do. Yes, that's my definition.
Thank you.
That helps me sleep well at night, as you can imagine. Good
Okay,
question.
very good. Is there anything you need to, now, Dave, you have a service, right? Should we mention that for tutoring people?
Sure. So yeah, like I've mentioned, I coach traders at various different levels. I have a free newsletter here where I write to. So if you're interested, you can sign up for the free newsletter. I'm my big thing is helping people come up with their own trading edge and strategies and improve them. So that's what I know I'm good at, and that's what I like helping people do. So yeah, if you're interested, you can sign up for the newsletter. There's the link to Trade Ideas there, and reach out anytime on email. I love trading and love talking to other traders, so feel free to reach out.
Yeah, Dave's newsletter is very active. I get it, and he's got lots of good articles that he writes all the time. So you can get some articles, and it's completely safe. He's never going to sell your email to anyone.
No.
And well, unless anyone has any further questions, I think that gave me a much better understanding, and myself, and I'm sure others also, of a sound approach to day trading. Does anyone else have any final points, Dave, or anyone in the audience?
Well, I just want to thank you, Don, for having me. It was great to be on here, and I appreciate the opportunity.
Well, thank you so much for the time. We really appreciate it. I guess
Sure.
we'll call it a night. Thank you, everybody. Thanks.